the lessons we should take away are numerous, but right now the projections by folks that know a lot more than I do are that it might get into the $5 billion range. A lot of that's going to be determined on how slowly it moves across the land mass now that it's made land relative to the flooding. I'm guessing that the flooding part of it that I know a little more about is going to be between $1 and $2 billion that the NFIP will be responsible for.
National Flood Insurance Program.
The National Flood Insurance Program. The wind and all the other damage, I'm sure this is going to exceed $5 billion.
And that the wind damage is the part that the insurance industry is really on the hook for.
Yeah, the private market is on the hook for most of the windstorm, and the NFIP, the government and taxpayers, will be on the hook for most of the flooding. One of the reasons, I mentioned the reforms. We need to get the government out of the flood insurance business.
What's your concern about this? We've talked a lot about it recently because of Florence, too.
Yes.
What's wrong with the way the flood insurance program is set up?
Well, originally Congress envisioned the NFIP as a bridge for the private market to gather information about how they should rate flood insurance, but it's morphed over the years into a monopoly. And it's not an efficient monopoly, and therefore, if the private sector were allowed to bring the invisible hand into the flood insurance market more freely, and you can buy private flood insurance. There's no law against it.
No, but your concern is that the pricing in the National Flood Insurance Program is not appropriate, that the prices would be higher if the private industry was actually involved and it wasn't the government.
Actually, the efficiencies of the private market would probably bring prices down for almost everyone. It's the repetitive loss properties that would probably not benefit dramatically from the private market.
Well, they wouldn't be.
But everybody else,
they wouldn't be nearly as repetitive, and then
exactly. With artificially low prices, you incentivize people to build where they shouldn't, which we've been doing now for 50 years. Hence, the massive values we have on the coast were facilitated by, perversely, our own $50 billion as taxpayers.
It sounds like the financial crisis. Too big to fail. It sounds like the financial crisis. If you've got someone else covering your losses, if you can't lose,
you keep doing it.
Right.
Yeah.
Student loans, Fannie, Freddie. List.
And the invisible hand was 1776, and we still, you said, it was like, wow, that's really smart. And it's like it's been so long.
What's the answer now, then?
Yeah. Well, interestingly, the answer is pretty simple. Either the administration can act to tell federal lending regulators, because the impediments to private flood insurance actually have emanated mostly from A, the NFIP and the creation of WIOs, which we don't have time to get into, but B, federal lending regulators who were told by the NFIP that private flood insurance was dicey, and the federal lending regulators just can't get past that, so they continue to try and tell banks not to accept private flood insurance when they should be saying, accept it, accept it, accept it.
Right. So who can make the decision to change that? Who's
well, the administration can do it, or Congress can do it. In 2016,
Congress is probably not going to.
Listen to this. In 2016, the House of Representatives voted unanimously to correct the problem. and now we're still waiting for the Senate to act, really. I mean, it is kind of what it boils down to. So the Senate is where the logjam is to correct the problem and let the invisible hand solve the problem. Because if we would let the invisible hand solve the problem, the NFIP would become the backstop insurer. Most people would save money by getting a private flood policy, and private flood wouldn't approve the building of places that are stupid to build in.